Hi guys, welcome back to NSE Closing Bell. It is turning out to be a volatile day of trade, but good for the bulls actually. By the time we go home, it'll still be a gain of almost 0.5% for the day. Third straight day of gains for the bulls. Kunj Bansal of Sarthi Group and market expert Anand Tandon join us now on the show. Gentlemen, afternoon to both of you. Kunj, I want to ask you your view on IDFC Bank and Capital First, because both those stocks are rallying now. The NCLT has approved a scheme of arrangement between IDFC Bank and Capital First. How do you approach Capital First?
So, except that the fact that NCLT has approved, which was an eventuality, I don't think there was any doubt in that. All other news developments of merger, the merger ratio, the new management structure, the new CEO as Vaidyanathan who will take over was well known. I think it's only on the basis of today's news, plus coupled with that maybe today's market positivity that both these stocks, obviously because of the merger ratio being known, have to move in tandem. This news has come in. And it's positive, of course, because IDFC Bank was lacking in business, which is what will be brought in by Capital First to the IDFC Bank merged entity. Okay.
Anand, hi, good afternoon. Your thoughts on Yes Bank? Let's talk back to of course, let me see the price now because, it's changing so fast. 175 on the stock. Your thoughts?
Well, if it remains a bank, there is a good reason to be looking at buying it at this price. The question really is who takes over and what happens to it after that. So, I think for most people, it would be better to find less complicated stocks to be buying. It is not necessary that just because something has fallen down that you should be rushing to buy it. Most of the NBFCs have also fallen, and the stocks you were discussing right now in the form of IDFC, etc. They are also banks. Many of the PSU banks, including State Bank, is not trading very expensive. So, if you need to be in something which is controversial, then that's a different issue for the thrill of it. But if you're an investor, I would think stay away from it for now.
Okay, well, Max Financial is the stock that should be on our radar now. MFSL, Max Financial, is now seeing a big surge. There's 2% stake which New York Life has picked up in that company, and that's Max Financial stock, up about 4% right now. So big move happening on that. Anything else? I think that's the only information that we have right now.
No, that is all we have. So the 2% stake it has picked up is through bulk deals and open market purchases, and this could amount to about 215 odd crores. So what this does is signals the renewed interest in the life insurance business that New York Life has in Max Financial Services, that is. So that's the reason perhaps you're seeing a big move there. Anand, any thoughts? I mean, this whole life insurance business, the whole sector has been gaining quite a bit of ground over the last many weeks and months. Is there scope for investors here?
Absolutely. I think without doubt, I think the market has been focused too much on the lending side and not enough on the savers part of the portfolio. And within the saving side, between AMCs and insurance, I think insurance is far stickier and is far more longer term. And again, the valuations there are far less challenging than you are seeing in the AMCs. So I would argue that some of the large insurance companies, especially in the life insurance space, are very attractively priced, as well as very attractively positioned in terms of where the market is and how far it can grow. So certainly insurance would be high on my list of investment ideas.
Okay, I think this was a block deal which took place yesterday. So obviously, this is not fresh news. This is what would have happened yesterday. There was a block deal, and I think the data perhaps would have got revealed. So there's absolutely nothing new in that, and that's why you're seeing now that perhaps pulling off a bit as well.
That's what I was saying. The news reports have also indicated that over the last many days, actually, New York Life had acquired shares of Max Financial from the open market. So there's an ongoing process where they've picked up stakes slow and steady.
Exactly.
But it still says a lot about their renewed interest in this industry, right, and the growth potential.
Yeah. Also, today's a good day for some of these NBFCs. So anyway, the markets again picked up quite a bit of steam. In fact, just look at that. The Nifty Bank once again now moving back about 26,800. Let's just pull out some names. Kotak Mahindra Bank, I think, is the one which is making a move. Just pull out Kotak Mahindra Bank's intraday chart once and see the kind of move that is happening on that stock. Look at that. That's taking the Bank Nifty higher. It's the third biggest component of the Nifty Bank now. So obviously, that's helping right now. Prakash, thoughts on Kotak?
Well, Kotak, just a moment. I'm struggling with my software.
Okay, we'll try.
Okay. Mitesh, your thoughts?
So I think we are seeing some continuation, Anuj. I think after 2 days of pullback and this thing, my sense is that the first target should be closer to the recent highs, which is about 1305. The hourly closing should be revisited, and once we start getting past that, we can go higher. So I would be quite positive over here, and despite the fact that it's been choppy with some kind of news flows both on the positive and the negative side, I think the overall technical structure suggests that with choppiness we are bound to move higher.
Okay, well, there's not a dull moment in this market. Look at that, some more news flow. Jain Irrigation has got an order worth almost 584 odd crores. So that stock is spiking up as well, and so is the market. But let's get you some market opinion now as we close down for trade. Earlier today, we spoke with Arvind Sanger, the managing partner at Geosphere Capital Management, to get his views on the appointment of the new RBI governor as well as his sectoral calls. Listen in to what he had to say.
It seems to be quite likely that we're going to see a more dovish RBI, and clearly the government. Unfortunately, some of the messages that the politicians are going to take away from this election, whether it's in Telangana or it's in any of the 3 states that Congress won, it is that farm loan waivers and other ways to raid the treasury to reward the electorate works, and therefore we are in for some pretty competitive bidding for how much handouts each party can give, and that's going to provide. And so one of the things we've been talking about is the beneficiaries are going to be companies with exposure to rural India.
The FIIs have marched out for the last 2 consecutive days. What could be bugging them? I mean, it could be just a normal hedge fund activity. It could be long only funds. Are they worrying about political uncertainty? Are they worrying about a possible overdose of fiscal and monetary largesse?
Well, I think certainly the political uncertainty would have scared them, in the trading on the day of the election results. I think that the trade issues are pushed on the back burner, but not for a long time. And I think, the question is, does India's, somewhat looser monetary and fiscal policy have long-term consequences or not? My sense is the long-term consequences are far enough away that I don't think either foreign or Indian investors should be too concerned. So I think foreign investors will be out and in. I don't think that they will drive this market. Domestic investors will drive it. And, our view remains that we look for good bottom-up stories.
Would it be a good time to chase some of these consumption stocks, or would you be a bit cautious about elevated valuations?
Well, no, I guess if you're talking FMCG names, no, that's not what we'd be going about in terms of beneficiaries. But, if beneficiaries of rural consumption indirectly, whether it is, you mentioned Maruti's had a lot of interest, and, so it'd be companies, 2-wheelers, 4-wheelers, tractors, making loans to rural households or rural businesses. Those will be the beneficiaries, although the loan part, we have to be careful about who's going to get caught up in the, loan melas, I guess, if I can use an old term.
We've seen market breadth, which was really bad all through the last month, even in the rally. Last 2 or 3 days is some indication of that opening up. This year has been very tough on the mid caps and small caps after a massive rally in 2017. Is it time perhaps to now look for going into high beta names, loading up the portfolio on the mid caps, take some risk?
I think one has to be nimble in trading if that's the approach that investors are trying to take, because as I mentioned earlier, the trade tensions are likely to flare up again. In our opinion, we're not anywhere near the home stretch of the U.S.-China trade issue, and I think the Indian political uncertainty is not certainly going to disappear out of the window, and so I think that one has to be a little more careful and a little more selective.
Yes, Bank, there's a board meeting. They will decide who the chairman is, and in due course of time, the MD as well. What are your own thoughts on how to approach a stock that has gone through so much, but it's still sort of making an attempt to see a recovery?
Well, I mean, I think the real issue here is, who is going to be the new head of the bank, MD, chairman of the bank, and what kind of issues need to be brought out in terms of whatever might be lurking that investors and that RBI have been concerned about in terms of what's hidden in the loan book. So our own view is we're not quite as brave as to go after that one, not knowing who the new person will be in charge will be and how complete a house cleaning will be done. So, our preference is more the ICICIs and the Axis where the known issues are already out there. And we don't have to worry about, leadership or the decision they will make.
Hi, welcome back. It's just about 6 minutes left and the market will close for the day. So it's 3 days of rally is what our market has seen. And now it's a 1% rally that the Nifty has seen for the week so far. And the mid-cap index is up 3% for the week. So really going good. Prakash Gaba, any final thoughts before we wrap for the day? What should the trading call be tomorrow? You think that it's better to just book out your profits if you have them?
My only concern, Sonia, is that it's run up too fast. So I see a sense of some kind of fatigue there. It does not mean that it's going to come down because only few stocks are showing fatigue there. But it's quite possible we may see an up move here. The next technical target still is 911. But if it opens the gap up tomorrow, what do? I will sell it off.
Okay, sell it off. That perhaps could be the call from here on. Anyway, just look at some more names. PC Jewelers, by the way, is up 20% now. That's a big move happening on a small stock, of course. 20% higher is what you have on PC Jewelers. Anand, warning signs you would say in the mid-cap market, or just can't make from just one day move?
Well, I think the market is really playing for the fact that liquidity in the system will return, and given the fact that both valuation-wise, mid-caps have taken a larger hit, and my thesis always has been that it is liquidity which drives mid-caps rather than valuation. So you have a unique case where the front lines are expensive, the mid-caps are relatively cheaper, and the fact that there is an assumption being made, at least for now, that liquidity will come back to neutral, if not positive, and there may be even a cut in interest rates. So in all of that, obviously, I think the mid-caps can continue to do well. And I would argue that if the market has to remain where it is more likely that the mid-caps will rally from here some more before they start moving down. And the large caps will take a pause and rest where they are. Of course, you could take a much longer term view and say that, interest rates are still likely to get higher in the world. And therefore, to that extent, equities as an asset class themselves will remain under challenge. And that, I think, is what will cap the market overall. So the near term, I think mid-cap outperformance is what I would also be modeling.
Okay, so just about, 3 minutes left. Are we smelling some signs of froth building up? I mean, after looking at a 20% rally on PC Jewelers?
Not really, Sonia. I think just to carry forward Anand's point, large caps have had a big rally, and this year the mid-cap index has really underperformed. And mid-caps would really come back into their own once you get a sense that the market has bottomed out. If the sense is that indeed the market's bottomed out, in that case the mid-caps will outperform. A lot of people also still licking their wounds from the kind of mid-cap crash that we had midway through the year. So I think that perhaps explains the kind of move we're seeing. Just one day move in a stock like PC Jewelers, I think we can't really say. It will need to be 5 or 6 such days. There is so many stocks like this. Before that, I don't think you can take that call.
Okay, well, Kunj, what about you? What would your top 1 or 2 non-index large cap ideas be? I mean, if someone wants to build their portfolio now, what would you be advising them?
So I wouldn't say, since you have asked non-index, then it would probably move down from large cap to upper mid cap or mid cap. So the call is between weathering the election uncertainty in the May and June and not weathering it. If you are happy to weather it, then there are good valuations available in automobile and cement. So something like a Ramco Cement, or within automobile, again it will go to index Maruti. If you don't want to weather the uncertainty because of the government change, if it happens, then the consumer stocks are something, but their valuations will remain challenging. You can look at stocks like V-Guard, stocks like Crompton Consumers. So these are some of the picks that one can look at.
Okay, well, just 2 more minutes left. So let's just close for the day. Before we wrap up, Mitesh, what would your view be for tomorrow? I mean, the common wisdom would suggest that after 3 days of a hectic rally, better to perhaps book out. But would you have any other view?
No, I think that will be fine. I think, don't book out, but I think at least trail your stop losses. Today's low is 10,750, which also happens to be the 200 average. Just 15 points off that or 10 points off that would be a good stop loss to hold on with. Maybe 2-3 days you might have slightly more subdued kind of sessions, two sessions or so. But I think eventually we should pick up again. So the idea should be to wait and watch. If somebody wants to buy a fresh or add on to positions, intraday dips closer to about 10,750 like we got one today would be the idea.
Okay, just about minute left for markets to close. So let's just do a quick recap of where things are. Well, it's been a good day for the bulls. You have to say that despite the kind of intraday fall. Okay, that's an important news actually coming in on Delta Corp. It's filed petition in Bombay High Court against the Daman and Diu government with regard to license. So obviously that's going to be the next trigger of obviously for Delta Corp. So they want to appeal in the High Court and get that stay vacated. Let's see if that's how it turns out. But for now, that's the news that we have at this point in time. In terms of individual stocks, of course, it was quite volatile through the day today. You have Yes Bank, which was down about 6%. I'm, taking the biggest loser first because it was the most volatile stock. On the way up, Indiabulls Housing up 5%. Grasim, Wipro, Maruti, Kotak, HPCL, Infosys, L&T were the big gainers. While on the way down, you had names like Sun Pharma and UPL apart from L&T, Sonia.
Okay, so in the mid-cap space, Anuj, the index did better than the frontliners. PC Jewelers was the star. So whenever that happens, you have to be a bit cautious, right? 21% gain on PC Jewelers. But then you had other financial names, Ujjivan, that was up almost about 8-odd%. You had DHFL that was up about 2.5-odd%. Federal Bank was up in the green. PFC, Reliance Power, Relcap, all these stocks did pretty well. Apart from that, BEL was up almost about 6-odd%, so keep an eye out on that as well. Delta Corp ended in the green with some gains. Max Financial also on the back of that news flow. Jain Irrigation had that 584 crore order, so Jain Irrigation also goes home in the green. On the downside, JP Associates, SAIL, a lot of metal stocks actually corrected today. Ashok Leyland was another one that was a tad bit in the red. But you know what, no complaints. It was a good day, a better day yet for the mid-cap index, and the market breadth was very strong by the end of trade. So the positive tidings continue over there.
Oh yes, so it was overall a good day, you'll have to say that. 50 points higher on the Nifty, and I think for the week now it's a decent gain that we're looking at, especially in the mid-cap market. We're looking at 3% gain for the mid-cap index compared to 0.9 for the Nifty. Mitesh, final thoughts?
So Anuj, I think as we discussed and Sonia was also commenting, I think after 3 days, and you've also highlighted the fact, after 3 days of good rally, I think the market might just settle down. We've talked about targets of 10,820, 830. We had a high near that, and the support of 10,750, which is the 200 average, also held out. So maybe this 80 point might keep the market chained for a day or two. But I think eventually I would still be positively biased and look for a breakout beyond those levels, heading towards the earlier highs of 10,940, 950.
Okay, gentlemen, thanks a lot for joining us, and it's been a good day. 10,791, so almost a 500-point rally from the lows is what we've seen over the last 2 or 3 days. Having said that, we did have a bit of a choppy day, so we came off a little bit from the highs.